From gold rushes to financial crashes, let's unpack what's happening in today's real estate market.
Send it.
All right. Is the market giving deja vu vibes? People are lining up around the world to buy gold. Let's check out this video.
Yeah, it's crazy. Like, you got Hong Kong, Australia, like Vietnam. There's like, I thought it was fake at first. I thought, I'm like, oh man, it's just a group or whatever. But then you could look on X and you start looking at all these people posting these people are waiting for gold.
So this is Australia. We've got Vietnam. I mean, it's just crazy. I mean, look at all of these people lining up to buy gold,
like,
and it hits an all-time high.
What is going on in their head right now, I guess? Like,
well, gold broke 4,000.
Yeah.
And it's currently sitting at about 42.25 at the moment, which is...
It was at 4,300.
Incredible.
Almost 4,400 yesterday. So it's down today, but...
Congrats to all the gold holders, that's for sure.
Yeah.
Happy for you that gold is treating you so well. But what's causing this? What's the underlying brewing financial,
Well, there's definitely a lot of theories about this. One theory is the commercial situation that's going on. Another theory is the commercial banks. Some of these banks that are starting to see some cracks. Another theory is the U.S. is front running all of this, and a lot of these central banks are getting rid of their U.S. treasuries and buying gold instead. So they're transferring all.
Okay,
this.
but what we're seeing though is the individual lining up to buy gold.
Yeah,
and so maybe that is coinciding with some of the other.
Yeah, I mean the individuals aren't buying much. I mean how much can an individual in Vietnam buy? I mean, they're buying a few ounces, maybe. I guess I don't know. Maybe
we don't know. But when investors flock to gold, it's usually an indicator of something much deeper.
Yes.
And we know that there have been cracks in the banking system. So Zions Bank recently has, exposed that they've lost billions of dollars unaccounted for.
Yeah, and what's the company First? I want to say First Watch, but that's a restaurant.
First Brands.
First Brands.
It's like the auto parts company.
Yeah, and apparently they had these loans with one bank, and then they had loans with another bank. And there's a couple different banks that they've had loans with that basically they're like the money's gone.
So the bankruptcy exposed the cracks in the balance sheet.
Yes. And
the billions of dollars that were unaccounted for. And what we're also learning is that a lot of these delinquencies are being extended. They're extending and pretending. So they're extending the loan and they're pretending that everything is okay, but really what's happening underneath the surface is there's no ability to repay.
Yeah, they're pretending that these assets are good assets and that they'll be able to refinance them down the road. They're all, I think at this point, they thought that maybe rates would be lower at this point, and it's not. So everything's starting to show some cracks.
Right. So are we going to see some sort of banking crisis? Now, in the past, when there's been a banking crisis, what's typically happened is the Federal Reserve has fired up the money printer and flooded the market with Elliot's not here, so I don't even know if I should say liquidity, but liquidity, which has absolutely propped up the banking system. Could this be why we're seeing gold spike? I mean, you look at gold now, it's sitting at a $30 trillion asset class. Mm-hmm. Of course, I love to compare that to Bitcoin. Yeah. It's a $2 trillion asset class. And so I just think the upside on Bitcoin is absolutely tremendous.
Digital gold.
Very bullish on that. Yeah. But one of the things that's also interesting, though, is we look at when things start to fall apart, people, they flock to hard assets. They flock to gold. They flock to digital gold. They flock to real estate.
Yes.
And so
you see these countries too where they don't have real estate.
Yes.
And I think that's why they're probably lining up for gold, because they can't just go buy a piece of property.
Right.
The only hard asset they can get their hands on is like gold, silver, the metals. So that's why you see some of these, the Vietnam, the Australia. I mean, I'm sure you can buy property in Australia, but maybe not as much. I don't know what their laws are, their property rights are, but yeah. But then meanwhile, you can go to Costco and buy gold here in the U.S.
Gold bars, yeah.
Gold bars, yeah. But I think they did put a limit on how many you can buy per day.
Oh, did they?
Yes.
Recently?
I remember reading about that.
Interesting.
I'll have to look at that. Maybe we can throw it in here. But
well, there's also continued and increased interest and demand for U.S. real estate. So National Association of Realtors reports how much foreign investment in real estate occurs every year. And this year, what they reported is that foreign buyers purchased $56 billion worth of U.S. homes. Not only that, but that represented a 44% increase from the previous year. That represented a 33% increase from the previous year.
So I did the math on $56 billion worth of real estate. And if the average home was $400,000, that would be 140,000 homes that foreign buyers bought last year or this year.
Yeah, so they actually give the number of properties here. It was 78,100.
Oh wow, so that was even
so
higher.
A higher, yeah.
Higher.
So foreign buyers on average are purchasing greater than the average priced home then,
Wow.
right? So
I remember hearing we have a friend in Canada or whatever, and they had some foreign buyers buying stuff, and it's just like they're buying these properties and they're empty,
sitting empty,
Yeah,
right?
sitting
It
empty.
was in Toronto,
Yeah.
right. We had met with them for dinner when we were in Canada, and they were saying that all of these $1 million plus properties were just sitting vacant because they were being purchased from foreign buyers and just being held.
Yeah, because they're holding them as assets, not as, hey, I want to live in this house. I want to protect my money.
Well, the top 5 countries of origin for foreign investment in the U.S. Number 1 was China, Canada, Mexico, India, and the UK.
Wow.
And then the top 5 destinations that they purchased: Florida, California, Texas, New York, and Arizona. Arizona made the list. Can you believe it? That's kind of funny.
Yeah.
Like, where are they buying here in the U.S.?
Well, I remember Maricopa. It was like a bunch of Canadian buyers were.
There
were buying
were,
in
right,
Maricopa.
at one
I remember
point in
seeing
time.
like the billboards like Canadian, like Canadian
I know, and I always used to,
flags and stuff like
I always
that.
used to wonder how that didn't like violate fair housing. When I would see those billboards, I'm like you can't do that, but they did. So they're
we
definitely
work with Canadians.
a lot of
Like,
interest.
What's up with that?
But are we going to see more of that? The market has been a little icy. It's been cold. Are we going to see more foreign investment in U.S. real estate? Maybe even the remainder of this year.
Maybe, yeah.
Yeah.
We'll see. It's gonna be very interesting. I feel like there's something underlying going on right now with the price of gold. That's just, and then these lines, you're like, what's going on? Like, why are these people feeling like, I mean, really what's going on is they're feeling like their currency is about to become less.
Right.
And so whatever they're holding to buy gold, they realize that I got to get rid of this currency that I have and get into this.
Right.
So why?
Well, one of the most fascinating podcasts I've watched was the CEO of Coinbase, Brian Armstrong, and how he was on the Lex Friedman podcast.
Yes, yeah, I remember that.
And he was talking about how he lived in Argentina during their currency collapse. And it is what inspired him to do what he does today, because he witnessed the currency collapsing.
Yeah.
And it was just so devastating to have your currency be worth less the day after and less the day after.
Yeah.
And just the desperation he saw in the people and the need for something that couldn't be manipulated.
Yeah.
Like a digital gold.
Yeah, I wonder what these people are saying today after they bought yesterday in their line. Now they're looking at the gold coming down.
I mean,
but,
not much.
It's not, I'm sure it's going to continue going up. But
the trend will be up. I mean, it's down. It is down a little bit as of right now, about 2% from yesterday, but still, that's negligible in my opinion.
So there was a theory going along on in some of the YouTube videos I was watching yesterday, that what's going on is a lot of the U.S. government is buying more gold right now. They're buying a crap ton of gold, and then they're going to get it to where they have it to a certain price, and then they're going to reverse and go into Bitcoin. And then so a lot of these other central banks that are following and buying, and a lot of these countries that are buying gold are going to be stuck with gold, and then the U.S. is going to go right into Bitcoin. And then dump their gold. And if they dump their gold to buy Bitcoin, will gold be worth the same? If the U.S. had no gold at all and had all Bitcoin, what would that do to the price of gold? The price of gold would go whoom, right down to the ground.
It's an interesting theory. I think that the Bitcoiners would love to hang on to that one. Of course.
Well, I mean, Saylor talks about this. About how this would be the way if the U.S. wanted to do what they want to do and keep the power of the money, of the currency, that's what they would do, because you would take all of that and then dump that other hard asset to make it worth nothing or worth a lot less, and then I don't know, maybe it doesn't make sense. I can see it, but I don't know if it would work. Who knows?
Well, there is definitely a lot of upside for Bitcoin, and whether it's gold, Bitcoin, or housing, there is certainly a flight to hard assets. What do you think? Drop it in the comments, and thanks for tuning in.